What if everything you were taught about achieving financial security was a deliberate, mathematical lie designed to keep you trapped as a permanent debtor in a failing financial machine? Go to school, get good grades, secure a stable corporate job, work 40 hours a week for 40 years, pay your taxes, save your money, and you will eventually build a prosperous, free life. For generations, this traditional blueprint has been the foundational anchor of the American middle class. It is the core promise of the American dream. But if you are watching this video right now, you already know that something is fundamentally broken. You are working harder than your parents ever did, your productivity is at an all-time high, and you are doing everything the system asked you to do, yet, at the end of every single month, you look at your bank account and realize you are just one minor emergency away from total financial ruin. You aren't falling behind because you are lazy. You aren't struggling because you made poor personal spending choices. You are falling behind because a regular corporate salary in the current economic paradigm is structurally, mathematically programmed to fail. The retail public assumes that hard work is the ultimate driver of wealth accumulation. But billionaire macro investor Ray Dalio, the legendary founder of Bridgewater Associates, has spent 50 years looking at the cold, unemotional mechanics of the global economic machine. Dalio's extensive research across 5 centuries of economic cycles reveals a brutal reality. In the late stages of a long-term debt cycle, the reward for human labor is systematically confiscated to bail out the owners of capital. The state does not execute this confiscation by taking money directly from your wallet. They execute it through a sophisticated process of monetary dilution, wage stagnation, and credit inflation that ensures your hard work yields less real-world purchasing power every single year. You are running on a financial treadmill that is accelerating backward. In this forensic breakdown, we are going to use the Dalio Blueprint to shatter the illusion of the modern corporate salary. We will expose the hidden mathematical engine that Wall Street and central banks use to silently transfer the value of your labor to the top 1%, reveal the exact historical data, proving why wages can never keep pace with printed currency, and step by step, outline the precise capital allocation framework you must deploy today to stop selling your time for melting paper and start investing exactly like an institution. Let's look inside the machine. To understand why hard work no longer guarantees wealth, we have to look directly at the decoupling of productivity and compensation. Ray Dalio's research proves that real wealth is driven by productivity, the efficiency with which a society creates goods and services. In a healthy early-stage economic system, as workers become more productive, their real wages rise in a perfect, parallel line. This is what occurred in the United States during the 1950s and 1960s. A single regular salary could comfortably purchase a home, support a family of 4, secure a retirement, and provide upward economic mobility. But in 1971, the rules of global money were permanently rewritten. The United States government officially abandoned the gold standard, decoupling the paper US dollar from any physical constraint. This allowed the Federal Reserve and the commercial banking system to manufacture unlimited amounts of credit and paper currency out of thin air. Look at the structural data compiled by macroeconomists since that exact inflection point. While American worker productivity continued to skyrocket vertically over the last 50 years, real inflation-adjusted hourly compensation flattened into a horizontal line. The parallel link between hard work and wealth accumulation was permanently severed. Where did all that excess value generated by your hard work go? It didn't disappear. It was systematically absorbed by the financial asset markets. When a central bank expands the money supply by trillions of dollars to sustain an unpayable national debt, that newly printed paper doesn't distribute evenly into the bank accounts of the working class. It flows directly into the banking system, which forces it into financial assets, stocks, commercial real estate, and high-growth technology corporations. Because the top 1% own the vast majority of these financial assets, their wealth expanded exponentially without them having to lift a finger. Meanwhile, the bottom 80%, who rely entirely on selling their time for a fixed salary, watched the price of the real assets they needed to survive, like housing, education, and healthcare, skyrocket completely out of reach. The system transformed your salary into a liability. Ray Dalio's book, The Changing World Order, isolates the mechanical reason for this trap, the difference between nominal wealth and real wealth. Your corporate employer might grant you a 3% annual salary raise, and you feel like you are making financial progress. This is nominal wealth, the raw number printed on your paycheck. But real wealth is your purchasing power, the amount of real-world goods, services, and assets that those numbers can actually buy. When a state is drowning in $34 trillion of unpayable national debt, adding $1 trillion of new obligations every 100 days, it has no choice but to continuously devalue its currency to monetize the deficit. Inflation is a hidden, unvoted tax on human labor. If the real cost of your groceries, your rent, your car insurance, and your energy bills rises by 10%, but your corporate salary only increases by 3%, you didn't get a raise. You just received a 7% real wealth cut. Your time, your energy, and your physical life are being traded for a currency note that is melting under your feet. Cash is trash, and a fixed corporate wage in a late-stage debt supercycle is a guaranteed mathematical trap for the middle class. The elite corporate institutions and the multi-billion-dollar hedge funds managed by professionals like Ray Dalio understand this systemic extraction perfectly. They know that selling human labor for fiat currency is a losing strategy. That is why they do not save cash, and they do not rely on salaries. Instead, they operate on a framework known as capital allocation parity. They look at the world not as workers, but as architects of capital. The 1% understand that in a system driven by endless currency printing, the only way to protect your time and energy is to own the assets that the printed currency is forced to pump up. When the Federal Reserve prints $1 trillion, they cannot manufacture more physical land, they cannot manufacture more barrels of oil, and they cannot manufacture the core infrastructure of global technology companies. Therefore, the nominal prices of those finite, productive assets surge upward to absorb the diluted currency. The elite simply sit back and let the central bank print wealth directly into their asset portfolios, while the working class tries to solve a structural macro crisis by simply working 50 hours of exhausting overtime a week. You cannot solve a structural currency problem with physical labor. You must solve an asset problem with capital allocation. To step completely outside of the middle-class salary trap and apply the institutional logic of the Bridgewater playbook to your personal life today, you must execute a profound psychological paradigm shift. You must stop viewing your corporate salary as your primary source of wealth and start viewing it strictly as raw fuel for your capital allocation engine. Every dollar that enters your account must immediately be categorized and deployed into non-correlated asset modules that insulate your purchasing power from state-driven dilution. The Dalio Blueprint requires dividing your monthly capital surplus into 3 independent pillars that you can easily access on your phone or computer. Pillar number 1 is your global equity module. You must immediately stop concentrating your financial future into a single domestic stock market or a handful of speculative tech stocks. You must globally diversify your growth engine using low-cost index funds like VTI for the total U.S. market, combined with VXUS for the international market. This ensures that your wealth is directly tied to the collective productivity of global human civilization. When a government prints money and devalues your local wage, these multinational corporations simply adjust the nominal prices of their essential products worldwide, protecting your fractional ownership value from being inflated away by local political intervention. Pillar number 2 is your hard asset inflation shield, representing 15% of your portfolio allocation, split evenly between physical gold via GLD and diversified global commodities via DBC. Gold carries zero counterparty debt risk, it cannot go bankrupt, and it is the ultimate global anchor that central banks around the world are currently accumulating at historical velocities. When public faith in paper financial markets shatters and corporate wages fail to cover the cost of living, capital historically flees paper liabilities and floods into hard commodities, causing this 15% module to experience massive vertical moves that protect your total household purchasing power. Pillar number 3 is your fixed income risk parity core, representing 55% of your structure, divided between long-term treasury bonds via TLT and intermediate notes via IEF. While inflation damages fixed income over time, this massive defensive block is your absolute insurance policy against a sudden deflationary systemic credit contraction, a banking liquidity freeze, or an overnight corporate layoff wave. The independent movements of these 3 non-correlated pillars neutralize the violent market crashes that wipe out standard retail savings accounts, ensuring that your net worth curve moves steadily and predictably upward regardless of the economic climate. But the final, most transformative step of the Bridgewater playbook is the diversification of your personal value generation. Ray Dalio's book, Principles, outlines that you must view your career exactly like a business enterprise. If you sell 100% of your labor to a single corporate employer in exchange for a single fiat salary, your personal business model has a fatal single point of failure. You are entirely exposed to the financial health of that company, the whims of a manager, and the local tax framework of a single political jurisdiction. True financial sovereignty in the digital era means converting your specialized capabilities into global digital services. You must invest heavily in acquiring high-value skills such as artificial intelligence orchestration, quantitative data analysis, digital infrastructure, logistics, or international capital management that operate independent of geography. When you build international streams of income, automate your personal allocation discipline, and learn to view yourself as an independent capital allocator rather than a passive corporate wage earner, you strip the state of its ability to trap you. You stop being a captured consumer of a bankrupt empire, and you become a sovereign participant in the global economy. The erosion of the middle class salary and the failure of the hard work narrative is not an accidental glitch in modern society. It is the logical, historical conclusion of an empire that has reached the absolute leverage limits of its currency. The economic machine is executing a cycle that has repeated for 5 centuries across multiple civilizations. The working class will continue to watch their lifetime of physical labor get systematically hollowed out because they are playing an outdated game with massive domestic blind spots. But those who eliminate their cognitive biases, master the rules of risk parity, and treat every paycheck as raw fuel to acquire hard, productive global assets will insulate their families from the paradigm shift, preserve their freedom, and achieve absolute sovereignty when the global salary illusion inevitably collapses